Here at True Potential, our investment team have been paying close attention to this week's Brexit developments, and here are some of the key points to consider from our investment team's update. Published on Wednesday night at the end of a marathon 5-hour cabinet meeting, the agreement has been met with opposition on all sides except that of Prime Minister Theresa May and Michael Barnier, the EU's chief negotiator. The devil will lie in the detail, of which there is much in the 585-page document. The Prime Minister's assertion is that it brings back control of our money laws and borders, ends free movement, protects jobs, security, and our union. However, this was immediately under fire from various factions, all with their own political agendas to pursue. Dominic Raab, the Brexit Secretary, and Esther McVey, Work and Pension Secretary, resigned on Thursday morning and further resignations have followed. In the midst of such political turmoil, the markets have remained calm, reasoning perhaps that other options are not realistically on the table. Sterling is slightly weaker against both the euro and the dollar, but remains within its recent trading range. In truth, nothing has fundamentally changed. The government, despite cabinet unity, is now tasked with getting the deal agreed by Parliament. If it fails, the option of a second referendum, a general election, or exiting the European Union without a deal are all scenarios that have been discussed but rejected as not keeping faith with the original vote. Each one has been modelled as best they can be by investors for some time. While Brexit will continue to provide work for political and financial journalists, uncertainty will persist over the eventual outcome and what the ultimate ramifications for the UK and Europe economies will be. Our investment team had discussions with our manager partners, and there is a strong sense that UK stocks are being undervalued, particularly in light of the international complexion of many of our biggest companies. Undeniable too is the pent-up demand from international investors looking at the UK market. They seem poised to commit cash when there is greater clarity knowing that the UK is still a great place to do business. As we near the day of departure on March 29th next year, any further weaknesses in the currency could make UK assets irresistible, and if short-term investors remain reluctant to enter the market, then longer-term corporate buyers are likely to recognise the value inherent in UK stocks. A pickup in merger and acquisition activity will be something to watch out for.